And whether you realize it or not, one major French company has been ever present throughout the Games. That's because it has a major sponsorship deal for the Olympics to the tune of over $160 million. That LVMH has certainly made a big splash at the Olympics, but its bags and other items aren't exactly flying off the shelves, especially in China, with consumers. Sales in a region that includes China fell 14% last quarter. But Chinese travelers are spending in Japan, where a weak yen helped LVMH sales rise by almost 60%. The world's second largest luxury group, Kering, whose brands include Gucci and Yves Saint Laurent, has troubles of its own. Group revenue was down 11% in the first 6 months of the year, and net profit tumbled by a whopping 50%. The two outliers have been Prada and Hermes. Prada saw 18% sales growth in the first half of 2024 from the year before, while Hermes saw its revenue rise by 12% in that period. So let's take a closer look at all things luxury and why buyers are a bit reluctant to spend big. I'm joined now by Anthony Chan. He's former chief economist at JPMorgan Chase. Anthony, always good to have you on the program. Thanks again for joining us. So LVMH is splurging on the Olympics, but it and other luxury brands are dealing with underconsumption as a problem. What's driving that, and how important is the Chinese market when it comes to luxury goods vis-a-vis other markets?
Well, Karina, the Chinese market is very important. More than 1 out of every $5 that is spent in the luxury brand market is spent in by Chinese consumers. So it is very important. And to the extent that consumer spending is a bit sluggish, at least temporarily, until the Chinese government stimulates the economy a little bit more. And already you've seen the People's Bank of China doing that. You've heard the central government talking about stimulating the economy. So that's encouraging in that sense. If you go to other parts of the world, like the United States, we're seeing also some negative headwinds. Even the companies that are doing well, you've heard of the Ralph Lauren's doing a little bit better. But if you start looking at the next 12 months, the top line guidance is coming in somewhat below market expectations. So what's going on? What's going on is that consumers are not practicing or demonstrating abstinence with regard to spending, but they're experiencing and demonstrating some self-discipline. And that means that they're being more careful about the luxury brands that they buy, not to say that they're spending less, because in fact, consumer spending in the third quarter may be stronger than it was in the second quarter. So what are consumers doing? They're spending a little bit more money on experiential experiences, traveling and things like that. The LVMH example that you gave is what these brands will have to do in order to do better. They're going to have to work with celebrities. They're going to have to work with events like the Olympics. They're going to have to make their brands a lot more exclusive so that the consumers focus on those brands and start buying them. And second, perhaps try to take those brands in the direction of the experiential experience that consumers are spending. Associate them with an event, associate them with travel, those kinds of ideas, because it is a challenging market, Karina.
Anthony, are there regions helping lift or at least stabilize sales? We heard in that report that, the yen trade has been a boon there because people have been flocking from, Asia and China, for example, to go buy their luxury goods there. But are there other regions?
Well, Japan certainly is one of them. You're also seeing that some of these markets are looking at the young, aspiring consumer and giving them an opportunity to do that. So the other Asian economies are doing a little bit better than China, but China's certainly going through a soft patch, I think, and hope that it's going to be temporary. But that's something to deal with. The United States, quite similar. They're facing these challenges, and that's why these luxury brands are focusing on cutting costs, on managing inventory, and many of them are succeeding in that direction. But again, making those brands special and making consumers feel that the brands that they associate with means something to them and actually makes them happier, you have to go that extra mile, and that's what many of these companies are doing to generate additional business.
And at Kering, which owns brands like Gucci, YSL, and Bottega, revenue fell there 11% in the first half of 2024, an 18% slump at Gucci. Is this because uber luxury shoppers are dropping off, or is it more aspirational buyers, or is it both?
I think you're basically seeing luxury buyers and to some extent the aspirational shopper shifting towards a little bit more travel, shifting towards not buying as much. You saw that right after the global pandemic, there was a surge in this luxury market, and now it's tapered down. So now these companies will have to actually work a little bit harder to reach the consumers. But guess what, Karina? Some of these luxury brands are succeeding, whether it be tying their brands with celebrities, whether it be looking to tie that experiential experience with their products. These are all different strategies that in today's market have great potential.
And Anthony, are certain categories within luxury performing better than others? For example, luxury watches on the secondary market have dropped significantly from their pandemic highs.
That's correct. But what you're seeing is that some of these luxury brands where the products are positioned that they go well with some of the experiential experiences. Say travel, if you somehow offer these brands and say that they go well if you're traveling to Europe or if you're traveling to Asia, those type of goods, if they put that into the mix, it offers great potential for those brands. But again, mixing the product with the exclusivity and also with the experiential experience, you mix the two together, that is a winning formula for these luxury brands. But nonetheless, the overall market is much, much weaker. And so you have to work hard to get a niche of that market because the total pie is shrinking. But within that pie, if you target your product the right way, you will succeed.
Anthony, my friend, this is a topic I could talk about for hours on end, but we are out of time. Thank you so much, Anthony Chen.
My pleasure.